Hi there, I'm Daniel. I'm the New Homes Director here at the Mortgage Hut. If you're yet to be approved for your first mortgage, know that we've helped hundreds of people get the finance they need to buy their first home. Let's start by running through some of the most popular options that you might have seen. A fixed mortgage has an interest rate that is set for a predetermined period of time, and that can be helpful for buyers that want to know exactly how much they're going to pay for their mortgage each month, with the knowledge that the cost won't go up or down. This can make budgeting and planning easier, but keep in mind that if you want to remortgage to a cheaper deal in the future, while locked into a fixed rate, you may have to pay early exit fees, which can outweigh the benefit of any savings made from a change of interest rate. Tracker mortgages have variable rates that are typically aligned with the Bank of England base rate, which can fluctuate over time. A tracker mortgage lender guarantees that the rate charged will remain at an agreed amount above the base rate, meaning that should the base rate rise or fall, so will your mortgage rate. A sudden rise in rates results in higher monthly mortgage repayments, and this can come as a costly surprise to homeowners with tracker mortgages. However, interest rates for tracker mortgages can also decrease in line with the Bank of England's rates, resulting in lower monthly mortgage repayments. Let's say you take out a tracker mortgage that tracks at 1.5% above the base rate. You would pay 1.6% in interest if the current base rate was 0.1%. If the base rate were to increase to 0.25%, your mortgage rate would then rise to 1.75%. If the base rate should fall to 0.05%, your mortgage rate would drop. Lifetime tracker mortgages differ slightly to tracker mortgages, which are usually taken out between 2 to 5 years. After that period, the borrower usually remortgages in favour of paying the lender's standard variable rate, which can be a lot higher. The problem with that is that remortgaging every couple of years costs money, and over the lifespan of a mortgage, these costs can accumulate. That's why some borrowers seek out a lifetime tracker mortgage, which has terms that last for the duration of the mortgage. Some lifetime tracker mortgages also allow for mortgage overpayments, which can help borrowers clear their mortgage early, usually without having to pay penalties. Lenders will want to look at the size of the loan you're applying for, the size of your deposit, your employment status and income, your credit rating, any existing debts, and your monthly outgoings. So lenders each have a set of criteria they use to determine whether or not they can approve your application. So you need to position yourself as a reliable borrower who repays their debts. Fix any errors on your credit reports too, and remove any links to ex-partners or old flatmates with poor credit scores. There are a number of other things you can do to enhance your credit worthiness, including registering to vote, managing your available credit carefully, closing any inactive accounts, paying your bills on time and staying out of your overdraft, and avoiding applying for any credit shortly before submitting your mortgage application. New build properties appeal to lots of first-time buyers, and with a pool of housing developers to choose from, finding a good deal with incentivised extras like cashback, free appliances, or even free flooring and carpets needn't be difficult. New build homes tend to have fewer pre-existing issues that will need fixing, as they're newly built and must meet specific property standards before homeowners can move in. In general, they're more energy efficient too, which can result in cheaper energy bills when compared to an older property. Some mortgage lenders have specific products designed to finance newly built properties, and therefore their criteria can be more achievable for first-time buyers with smaller deposits. Help to Buy is a term that covers a range of government-backed schemes that have been designed to help first-time buyers get a foot onto the property ladder. The new Help to Buy equity loan scheme was launched on the 1st of April 2021. It is for first-time buyers and includes regional property price limits to ensure the scheme reaches people who need it most. The new scheme will run until March 2023. As with the previous scheme, the government will lend home buyers up to 20% of the cost of a newly built home and up to 40% in London. When you come to us for help, you'll get an appointed mortgage expert who can check your affordability and then source appropriate lenders for you to choose from. Finding the right mortgage is crucial for your financial future. No one knows what the future holds, so our brokers thoroughly examine mortgage agreements with various lenders to make sure that the terms you agree to are affordable and offer the right level of flexibility. We even help with the application process because we know this stage in particular can cause headaches. Errors on mortgage applications cause delays and can result in unnecessary fees that cost you money. A broker's job is to find you the best mortgage based on your circumstances, negotiate a deal, and then make the process as smooth as possible for you. It's a complete service delivered from capable, real people who enjoy helping people into home ownership.